The broadcast is now starting. All attendees are in listen-only mode.
Good day, Warriors. How's everyone doing? Hope everyone had a good turnaround Tuesday. Give me a Y if you had a decent turnaround Tuesday. As we're live streaming to the universe, our ideas. Hello, Kenneth. You had a good turnaround Tuesday? Okay, so the turnaround Tuesday call was to fade the dollar. It was this candle. Talked about 95.50 achieved. It was pretty much a day trade. Same thing in Euro. Who went with the turnaround Tuesday trade yesterday? Fading dollar strength up there. Because I want to thank everyone who did for deciding to go ahead and sign up, become part of our FX family, because any forecast I make in FACE, our free webinar, is only the tip of the iceberg of what you get becoming a subscriber of ForexAnalytix with the whole team, with all this research. Hi, Forex Gal. With the technology of pushed alerts, with the traffic light page, with patterns in play, with the private chat room, with Paul Lee's European crossover. So anyone who took advantage of yesterday's trade, any commitments on becoming a member, I'm going to check with the guys today, see how many people signed up. We have a meeting today. Okay, so I know you're only as good as your last call. I think that we have to start taking out this 95 level. And I was wondering if one of my teammates can help me. I clicked something accidentally that covers up the last couple candles here. You see this 0.92% on every chart I have. I don't know how to get rid of it. I've tried. I guarantee you I'm very low tech. Anyone want to rescue me? If not, we can handle it later. Just can't see the last couple. Okay. So S&Ps, they keep...
I don't know what you're trying to do, or I would try to help you.
Well, you see this right next to the price, and on every chart I have, it's a percentage.
Do you have a scroll wheel on your mouse?
Yeah.
Try to scroll that. No, okay. Try grabbing it. Just put left click and move.
No, I don't see it.
No. Just put your mouse over the
over
the chart, and then grab it and then move it to the left. No, it doesn't matter where. There you go. Is that not working?
No, I don't know what I did.
There's I don't know what you're doing either.
Okay.
There's also in the middle of your chart, there's a reset. Like it's at the very bottom. Middle of your chart, down on the bottom. There's a little the little reset. It goes around in a circle. No. Keep going to the left. Keep going to the left.
It's on the middle of the RSI. You know where the RSI goes up and down?
That's
it.
If you go a little bit higher, there you go. Go a bit right.
Right.
A little bit more. The icon on the right. That's the one. That's one.
Okay. See, so I just can't get rid of this cell, the minus 1.20.
Just grab it and move. I think it's always there. I think.
Oh, really?
Now just grab the chart and move to the left a little bit.
It's moving the chart and not that when I grab it. I'm trying to grab it. Yeah, see, it just moves the chart. I can't grab it.
Yeah. No,
maybe, Steve, I tell you what, I don't want to waste any of our valuable time. So, Blake, I saw a lot of great pictures of your trip. Looks like you had a great one.
I did.
Yeah. The Blue Note, you said the Blue Note, it looks like, did they have an open mic night there? Or
no, no, probably one of the most amazing artists. Her name's Anna Popovich, and she's this beautiful blonde woman out of San Diego or San Francisco, and she could jam. She was.
Yeah.
I have to actually show you a video of her because she's just absolutely amazing.
All right. Well, let's get to making money. Sorry about this little tech. I'm very low tech. Everyone that knows me knows that. Sorry, you have to be president to grab it, oh Ziggy. Okay. Pointer over, right click, then delete. Okay, I'll try that, Jack. So why don't you just take over my screen now, Blake, and maybe you're caught up. We had a little bounce, a little pullback in the dollar, not much follow through today. And I'm still waiting for maybe one more push up in the yen. Still looks really vulnerable. We had a very good guess yesterday, and we have Kirk Spano today, who was real right about things like Chesapeake several months ago and higher energy prices. So he'll be here. A great time to be talking about crude and Iran with the sanctions going on in early November. So I'll try and figure this out. Maybe Steve could help me over Skype before he gets on, something like that. Otherwise, I'll just guess where the last couple candles are.
Okay. Well, first of all, I guess I'll take over here.
You're trying to. I didn't have any issues while you were gone. Like
you're trying to get rid of this percentage right here.
Yeah.
Why?
Oh, because
is it buggy that bad?
Oh, because the way I have my chart set up, I have to drag them away because, well, I just have to shift the chart. Okay. No, it doesn't bug me that bad. Now that I know all I have to do is move it to the left.
Yeah, I mean, you just move it to the left, okay. And then you don't see it. Anyway,
all right.
Good luck.
Good to be back with Mr. Technology, huh?
Yeah, exactly. Well, it looks like I didn't miss a whole lot. I mean, it looks like a lot of the volatility was in equities, where you had a nice little sell off in the S&P and the Nasdaq, which I covered up my shorts Monday morning when it was Columbus Day because the futures were still open, and I closed everything, which is good. But it looks like we've been consolidating since then, so not a whole lot going on. And the S&P actually looks poised to break again. We might actually start breaking down again this morning. So that the risk is there is if the S&P is about ready to break lower, which it looks like it could, then the question is what happens to the dollar? Because I would think the dollar is set up for a move, higher if that's the case, because it looks like the market's ready to make another move again here. And the dollar has been, I think a lot of people are thinking that the dollar is finished here. The dollar is not going to move any higher. But if the market continues with this risk aversion theme, what's going to stop the dollar from continuing to rise? And I have no FX positions on right now. I'm not even. I don't even. I'm looking at things and I'm not inclined to do anything. The only thing I was looking at is I was looking at the dollar Canadian, and I'm like, well, I'd really want to short the dollar Canadian on a move up here to 130. But if this market's going to roll over, and we're going to see like look at the S&P. I mean, we're touching this triangle. Like, this is a triangle that's been forming, and if we push down like this in the S&P, which looks like we're going to do, I don't think you want to stand in front of the dollar at the moment, So I think there's a lot of people that are trying to pick up the euro on the cheap here, thinking that this move is over. But I don't necessarily think that that's going to be the case. The cable, on the other hand, the cable's been holding up relatively well, and I haven't been following the news stream at all, so I don't know why the cable is outperforming the euro. I'm assuming because, traders are assuming that the Brexit deal is going to get done soon. But
Blake, sorry to interrupt.
No, please.
There was an article yesterday on Reuters that said that there is a very good chance it's going to be done by Monday or something very near term. Where did they get the source? I don't remember, but it was quite bullish, that one. So I think that's where yesterday's strength started, and it's just carrying on a little bit today. And
it's just it looks like, I was going to say, it's still managing to hold up really well. But again, if the market, I mean, you look at the S&P. The S&P looks like it's on the cusp of breaking lower here. The Nasdaq. Matter of fact, if I draw this out, like the Nasdaq.
It was the Wall Street Journal. Wall Street Journal, actually. Thank you, Amanda. Sorry to interrupt.
Oh, no problem. But it looks like if the Nasdaq breaks lower, the S&P breaks lower. Do you really want to be short the dollar? I don't know. I don't know if that's really the right trade at this point. So, and the markets look vulnerable. I have to admit. I mean, the markets look like they look vulnerable here. Here's the Dow, and the DAX actually looks pretty weak too. I guess we can probably do this with the Dow, something like this. Because the dollar is going to be the beneficiary, I think, of some risk aversion if we see it. So but it looks like the FX market has just been consolidating since last week. I was looking at the Kiwi here, for example. The Kiwi hit a new trend low, but we bounced and we're rejecting 65 cents. So I think as long as we stay below 65 cents, you don't really want to be on the long side of it. The Aussie also looks like it's trading pretty heavy. And the Aussie is finding resistance right here, but we got channel support. So I'm looking around, I'm not really too convinced about doing anything in the FX market right at this moment in time. I don't see anything that's like super attractive, and so as a result, I don't have any patterns in play open at the moment with ForexAnalytix, because I don't see anything that's really captured my attention since I've been back. Like you look at the dollar yen. The dollar yen looks like it's still trading heavy. We knew it was going to pull back from this resistance, but you got bonds that are weak, yields that are stronger, yet you have stocks that are look vulnerable. So I don't even know how to trade the dollar yen. I think the dollar yen, is at risk of continuing a pullback, especially after hitting all this, key resistance. But I don't know if I really want to short it just yet. Without seeing the stock market actually, show some serious signs of weakness. And if we see a little bit of, weakness come into equities, I think the dollar yen would be a potential short, but I guess you got to see how bonds are responding as a result as well. So, and Stelios, when we hear that there's a, potential of a Brexit deal being done on as early as next week, what does that actually mean? So like has there been any details that have emerged?
No, it's a good question. No, and it's the same situation as the USMCA. We know there's an agreement, but we don't know all the details. So you're right. I think when it gets done, the pound will rally, but I don't think it's going to go that far before we can actually see what's involved. So yeah.
So that, without any details, it's hard to commit too much to the cable at this point. When I was looking at the charts this morning, just kind of getting reacclimated. The one thing that I noticed is the euro pound. The euro pound. If you really want to play the cable to the long side, wouldn't the better trade be to be on the short side of the euro pound? I would think. I mean, with all the issues surfacing in Italy, and with things looking like there might be some sort of Brexit deal, I think the euro pound would be the natural short at this point.
Yeah, I agree with that. I want to be short. I'm looking for good spots to enter shorts. Now, I actually did have, I mentioned it on the chat room, I did have a small position left, which I took out this morning, a short position, and I want to reload higher. But I agree with that. And also, by the way, I just want to say thank you, Scott, who in the comments has just written to us how to get rid of that. So Dale, I will tell you after the webinar or in the webinar, whatever you want. He's shown us how to do it. Okay.
Oh, look at that. Thanks, Scott. All right, that's great. That's great. So Dale, you might want to read some of the notes from Scott there, some of his comments on how to remove the percentage away from that. There's got to be, I mean, there's so many different settings here, and I'm sure there is, some way that makes a lot of sense that we haven't done. So now, as far as the currency market has and again, you have to excuse me, I've been in wine country, and by the way, if you've never been in Napa Valley, it's gorgeous. It's like you feel like you're in Italy somewhat, and the wine is great and the food's even better, and it was a really nice relaxing time. So I'm a little relaxed. I am very relaxed. It was very tough getting up at 3 o'clock this morning. I tell you, it was very, very rough for me to do that after having a few days of sleeping in. But I'll tell you, it was a great, really, really great trip. And everybody asked if I was, still drunk after drinking all that wine. And I'll tell you, I didn't drink a ton of wine. I did a lot of tastings, and but it's good wine. It's not like the bad stuff. It's really good, and I learned so much about the process, which was awesome. One of the really coolest things about what I did is I got to catch up with Kevin Ferry, who you guys might have remembered him on CNBC. He was on CNBC almost every morning for a dozen years. I used to stop. As I was driving into the office in Dallas, I would actually stop on the side of the road to listen what he had to say, because he's so knowledgeable. And he actually retired from the markets about 4 years ago, semi-retired, if you will. And he's been running. He ran Sterling Vineyards in Napa, and then he runs another vineyard called Cade winery and vineyards out in St. Helena. And I got to catch up with him, and he gave us, my wife and I, a personal tour of the wineries, which was awesome. He spent like 3 hours with us. It was great catching up with him. I haven't seen him since we were in Dallas together, and probably about 5 or 6 years ago. So that was a really, really phenomenal experience. If you guys ever get to go to Napa Valley, make sure you look him up. He's such a great guy. And you know what? It was funny. He's like, yeah, my laptop broke about 3 months ago, and I just threw it in the garbage, and I haven't touched it. He left the markets behind completely. So it's pretty interesting. Somebody asked me if I was going to bring him on the webinars, and I said there's no reason to. He's pretty much checked out. So. Even though he comments on Twitter every once in a while about like the markets, it's only from what he reads. He's pretty disengaged at this stage. So the setup that I'm looking at right now, and the thing that I'm paying the closest attention to at this moment in time is the US dollar Canadian. If you were here before I left, I said that, and I'll just have to zoom and take this stuff out, and I'll remove that fib here in a second. We were on our way to, towards the 130 level, and I said, hey, if we get up to 130, it's going to be a good short in the dollar Canadian. You probably want to be short up there. We actually hit 130. It looks like we hit it twice, and then we rejected, and we've pulled back. Now the problem is the market looks, when I say the market, I'm talking about the stock market. The stock market looks a little vulnerable. So if the market continues the sell-off that started last week, the risk is that the dollar Canadian is going to come back up here and test the 130 level again. And my thought process is, if the stock market really continues to sell off, then we're going to break through 130, and we are going to start moving up towards 131.50, which would be the channel resistance up here. Now, I know the market, and all the participants, myself included, we really want to buy Canadian dollars because we feel that the Bank of Canada is going to be more hawkish moving forward. They're going to want to raise rates. But the fact of the matter is if the market goes and sees a little bit of risk aversion, then we're going to see some Canadian weakness going into, as the market starts to, price in some risk aversion. So I think that's the biggest risk to being long the dollar Canadian right now. I think as long as we stay below this red trend line here, which is basically 130, or you can say 129.90, something like that. As long as we stay below that, the risk is lower. But if we break above this trend line, I don't think you want to be short the dollar Canadian anymore. And that's really the biggest setup I see right now. I know today we have producer prices, and looking ahead into the rest of the week, we have CPI tomorrow. So inflation is going to be really important for the market going forward. And if we see some inflation emerge on a producer level and on a consumer level, that might change the dynamics of the U.S. dollar Canadian a little bit, where you might have a Bank of Canada that's going to be a little bit more hawkish, but at the same time we could have a Federal Reserve that picks up its rhetoric a little bit. If we start to see a tick up from inflation as well on a consumer and producer level. So I don't know what to do with the dollar Canadian at this moment. I think the decision making process is going to be a lot more clear when we're trading up at 129.80, 129.90. I think that's where you have to really start making some key decisions regarding the dollar Canadian. And as far as like the other commodity currencies go, like I pointed out with the Kiwi, I can't be bullish the Kiwi while it's below 65 cents. There's just no, I know some of you might be, tempted to buy the Kiwi dollars. We're near channel support, somewhere down here. At let's call it 63.50, but we're not even close to that right now. So while we're trading below 65 cents, I think the risk is lower. You look at the Aussie dollar, while we're trading below this 71 and a quarter, there's no reason to be long the Aussie, and the Aussie still looks heavy. God, this S&P is really trading heavy here, guys. I have to point out that the stock market looks like we're going to resume this downtrend. If we resume this downtrend, the risk is the dollar is going to continue to move higher. And I look at the euro dollar, and I know the propensity right now is to buy euros because it's sold off, and we've sold off so much that it looks like it's kind of building out a bottoming process. But I'm not interested in buying the euro when stocks are trading heavy. I don't think that's the right trade at the moment. And Stelios, maybe you can shed a little bit more light. How's the situation in Italy right now? Have we gotten any news as far as I haven't even actually. I should probably take a look at Italian bonds here. But any news with Italy?
Well, there was supposed to be a meeting yesterday between the Prime Minister and Salvini, Di Maio, and the Finance Minister Tria about the deficit, basically the budget deficit that they want to agree on. But and there was a rumor, or let's say people thinking that it might get reduced a little bit from 2.4%. But From what I understand, coming out of it, Di Maio and Salvini were adamant, we're not changing what we think is right, and I think it remains at 2.4%. So I don't know what BTPs are doing today. I don't think they're doing that much, but
they're not.
There hasn't been anything major to do on that. It's still a lot of talk, and we still wait to see what's going to actually happen in the end.
So what happens to Italian debt if they have to service it at higher rates? I mean, then all their estimates go out the door, right?
Yeah, yep, exactly. And Italy has the same situation like Greece has. They no longer have control of the currency because they're on the euro, obviously. So if servicing the debt increases, they have to somehow come up with the funds. And they can't print it. They can't borrow more because, borrowing more doesn't solve the problem. You're issuing more debt. So how are they going to fund it? Good question. I have no clue. I really don't. The only good thing that I read this morning about Italy, and I thought it was very positive, is that the government, they're talking about introducing a flat tax structure, which I think is one of the things to do in countries like Greece and Italy and Portugal, where you have these complicated tax structures where, I know the Greek tax structure, I'm sure Italian is equally complicated, where it's draconian and so difficult that you get taxed to oblivion. And that's why people try to evade paying taxes. So
Plus,
if you go
the
back,
vast majority of expenses are not deductible, at least for individuals. Yes. That also is stupid because it gives extra incentive actually not to do transactions, over the table officially.
Yeah.
Well, good morning, Steve. How are you?
Good morning, Blake. Good morning, Stelio. Good morning, everybody.
Welcome back.
Good morning.
The whole dream team is back. It's not the same without you, buddy. Blake.
Well, it's nice to be back, and I'm a little, I'm just kind of getting caught up with everything, and I'm not, I'm not completely up to speed. It's it takes me usually a couple of days to get back in the saddle, but from what I'm seeing here, risk appetite still looks very nascent, and it looks like the markets are vulnerable. So
Steve will catch you up, buddy. I don't know anyone that does a better review of the whole board for 20 minutes. You could you could be Rip Van Winkle and go to sleep for 20 years and then wake up and hear Volgi, and you'll know what to do.
Awesome. Well, hey, I'm gonna pass it over to you guys. For some reason my dogs have gone crazy this morning, so I've got to go deal with them really quick. It's nice to be back, and Steve, I'm gonna pass it over to you really fast. And I'm sorry that might be a coyote or something up front. All right.
Oh yeah.
Welcome back.
Welcome back. Hello, Steve.
Hey, Dale. Good morning. How are you feeling? You sound much better day by day.
I feel better. And thank you. How about yourself, buddy?
Good. Better by the day.
A little relief?
Oh, yeah.
Great.
Physiotherapists work, magnificently.
I'm like the mother of ForexAnalytix. I worry about everybody.
Yeah.
Well, I don't know. Stelios is kind of, he's kind of like the sappiness part that we share in common, cares, it's very emotional. A lot of love in our company, don't you think?
Oh, yeah, absolutely.
Yeah.
Absolutely, yeah.
Really nice.
Absolutely.
So you guys have to let me know how many new subscriptions we got, because yesterday's Turnaround Tuesday trade worked pretty good. And, I say this a lot before you get started, Steve, that I really believe, and not just because I host the show, that it's the best FX webinar on the net, free or paid. Okay, so it's free. So people coming in here and making a few pips on our ideas. I kind of expect them to at least support us by becoming part of our family. So should be a few signups today is what I'm expecting. Or I'm going on strike for Turnaround Tuesday calls. What do you think? Huh? I'm going to go on strike. Yeah. Let's see what happens today.
Okay. I think
We have data in seconds.
Yeah, we have data actually. We have PPI data coming out. So let's first see what happened. Yeah.
So in line, month on month in line, year on year, it's a little bit weaker.
0.2,
Yeah, I don't think we're going anywhere with that.
0.2 versus 0.2, both core PPI and PPI month on September. So building permits a little bit weaker than expected.
The Canadian ones, yeah.
Yeah, the Canadian ones. Yeah. So that's it, more or less. So yeah, I'm not expecting any real reaction from the market. Okay, nice. So that means that we can definitely go over and see, what we've had today and yesterday. Not much has changed, at least, on the aspect of FX, but we did have some things I want to mention. One of them is definitely the price action with the Euro USD. Yesterday, we were talking about the potential of finally breaking below this 114.50, 60 zone. But, this is why, as I've repeated over and over again, daily closes are very important because despite seeing weakness during the day, the Euro USD ended up closing almost unchanged on the day. So that was an attempt, but not a successful breakdown, which means that, we're holding this zone. And actually, if we go down to the 4-hour chart, we can even see that, there is a potential for a descending wedge here. As you can see, there is also some clear RSI divergence on the 4-hour chart. So there is the chance, as long as we're holding above this 114.50, 114.60 area, to see a rebound from here. Obviously, this has to be confirmed. Until that happens, the pair is coiling, so anything is likely. I do think that we should get some kind of a resolution, though, obviously within the week. I mean, can even happen today. The exact opposite situation is what we're seeing with the dollar. The dollar has already made a move below this formation. The dollar had like an ascending triangle here. It seems to have broken below it. Let's see if it's actually going to act as a resistance and we're going to get lower levels in the dollar. Obviously, if that happens at the same time, we're going to see the triangle in the Euro USD breaking to the upside. So especially given yesterday's non-confirmation of that breakdown, I would be a little bit cautious because, we might see some short-term weakness in the dollar and, an equivalent rebound here in the Euro USD. At the same time, if you see USD Swiss is also telling a story here. USD Swiss has actually stubbornly gotten stuck. It has already produced, counting yesterday, 4 consecutive pin bars, right on or just below, depending on the day, the 78.6% fib. So, we're also seeing, this pair stalling at some important resistance area. So I'm waiting to see how this is going to resolve as well. Now, having to do with the cable, I think that Drake already mentioned, cable is obviously behaving somewhat better than the rest. Regardless, in my opinion, anything between 130 and 133 is more or less noise, since 133 has already rejected price action once, and it has the potential of doing so again if we get up to that level, right? So it is stronger than the euro, which is something that we can clearly see in the euro pound, as Blake mentioned. And to be honest, this price action in the euro pound should be extremely worrying for the bulls, because after 9 months of a consolidation within a descending channel, we are seeing that we got a break higher. We came down, we retested this area, initially held, but then broke down below it. And usually this type of price action shows that the market might move a lot lower. It's currently testing support anyhow, so obviously selling down here doesn't make much sense. But I do think that now, as long as we stay below 88.50, selling rebounds is the way to go. I think there might be a lot more coming to the downside. We already see oversold levels on the daily, and that's another confirmation that something has changed here. Definitely, this has been for a long period of time a very, very hard market to trade because after spending a long period of time just chopping around, it then gave us a false signal. So obviously, I guess a lot of people have been trapped one way or another during those phases of consolidation or while we seemed to be breaking out. Now, nothing has really changed with Blake mentioned it, but I'm going to go over it, very fast. I wrote that in yesterday's analysis. Aussie and Kiwi, Blake showed it, both getting rejected from the previous low. So, don't just try to jump the gun, because Aussie and Kiwi still have to do a lot more to prove that something is changing in the bearish nature of the markets. So, this is the only thing I wanted to add, having to do with those. And now we can we can go back and have a look at the metals, where nothing much has changed, because gold on one hand is testing this ascending trend line support. If it breaks lower, there is a very, very good chance that we're going to see continuation to the downside and likely a new low below 1160, while only a break above 1208 will actually, point to another leg higher. Silver stalled for a couple of days on the 1430 support area. It's too early to say today what's going to happen. I mean, for the time being, it shows some weakness, but it's, as I said, it's too early on the day. I think that it needs to hold this area, because unless it doesn't do so, the chances that it's breaking lower are quite high. If we actually go down to a 4-hour chart and we have a look at silver here, we're going to see that we might even already have a break lower, because if you look at this ascending channel, silver seems to be trading below it. So currently also testing the 61.8 of this rebound higher. So quite important area here. It still looks very heavy. I think that if it loses this horizontal support, the chances that it's going to trade below 1393, which was this low, are substantial actually. This is the low, so it's a little bit lower, 1392.
Steve, there are some analysts that I know, that I've interviewed, that I read, that are starting to bring up 1120 gold. Can you see anything on like your weeklies or dailies that would point towards that area of 1120 in the gold? Yeah, that was a low right before 2017.
1120 is this low, actually, yeah.
Yeah.
1120 is this low.
Okay.
So
many more talking about that.
Listen, initially my plan for gold, and I've drawn this on the weekly like a long time ago, several weeks ago actually. Initially my plan for gold was once it broke lower from this ascending trend line, that it would obviously resume, find some momentum, push lower somewhat, then perhaps a rebound, retesting that area, and
right,
then
I thought that was going to happen too. Yeah,
pushing lower again. Okay. The problem is that the more weeks that pass and we do not get that rebound higher, the more the chances that the pair is actually correcting in time.
In a four. This could be a 4, right?
Yeah, correcting in time instead of in price, right? So,
right.
It looks day by day. It looks, in a bigger danger that it's actually going to resume lower without first producing that rebound. So, we need to be extremely cautious with both those metals. So this is my view on the weekly. And yes, as you said, this was a previous low at 1122.50 to be exact. And yeah, the market can find support there. There's no question about it. I mean, this is a level of importance. Also, if you see on the weekly RSI, this has been a very meager rebound, right? I mean, the RSI profile also looks very bearish. I mean, you would have expected, a more decent reaction higher, but so far, that hasn't been the case. Now, having to do with the rest of the metals, I think that copper doesn't look that bad because copper already produced one rebound higher. And, this looks like a decent bull flag to me. So I think in a corrective fashion, one more push higher towards 294 is still likely, as long as it doesn't, start taking more and more and more time consolidating without doing anything. So, if I had to do something with copper at the moment, it would probably be buying a break out from this channel, looking for a move towards 294, 295. So copper doesn't look that bad. And the same applies to palladium. Initially, I thought that palladium, after producing this little move lower, that it's going to produce one more leg to the downside. But seeing the fashion in which it has rebounded from there, I think that there is a second scenario here, which is more bullish, that simply, instead of producing like an ABC, that it might actually produce a triangle here before it moves higher. So perhaps what palladium is going to end up doing is this, something like that, right? So the palladium market still looks very, very strong. There it is. So the palladium market still looks very strong. There is still a chance that we're going to see one more leg lower. But as I said, it now looks even more likely that we're just going to see a little bit more consolidation in time before pushing once again higher. Why not towards this 127% extension of this leg lower, which comes at 1,120 roughly. So before we then get likely a deeper corrective move lower, something like that, right? So I would have loved to buy palladium if we got like a deeper retracement towards 1025 or 1000. But as it seems, it will have to push higher once again before then perhaps pulling back decently enough for me to feel that it's a good reward to risk opportunity. So I think that covers more or less the metals. Now, having to do with crude market is a little bit mixed here, but my main case scenario is the following. First of all, we got a rejection from a very, very nice confluence of resistances. I wrote that on the end of week analysis as well. This was a perfect confluence of the target of the inverted head and shoulders formation that we had here, and the 61.8% fib from the huge bearish move that we had, from, let's see, it was from the summer, if I remember, from roughly the summer of 2014 until we actually found a low in February 2016. So this is the 61.8, extremely important level. We pulled back. We seem to have found some strength, but I don't believe that this is done. So ideally, what I would want to see is one more leg lower, likely to retest this 72.50 area before then pushing higher once again. So in the very short term, I think that selling crude against the high might not be a bad idea if you're looking for a very short-term trade. But I don't think that the medium-term bullish interpretation has changed. So the trend remains higher, but in the short term, we might likely get at least one more leg lower towards 72.50. Now, if 72.50 breaks, obviously this 70 area comes into focus once again, but one thing at a time. So I gave you the short term and the medium term view for crude. Now, having to do with indices, I covered them yesterday very thoroughly. The only thing I have to say is that nothing has changed, which means this is, so far as we speak, the fourth consecutive day that the S&P is actually trying to test this horizontal support area. We had that previous high after that euphoria phase in January there. We tested this as a high once again in August. We then tested it as a low in September. This is the fourth consecutive day that we're testing it as a low now. And if I go down to the 4-hour chart, I even posted that yesterday on ForexAnalytix. As you see, we are trapped in this little zone. Yesterday, actually, when we were testing the high of the zone, I wrote that there is a bullish case scenario that if that had proved to be an inverted head and shoulders formation. But that's why with formations, you have to be very, very careful with what the trigger points are, because yes, that would have been a perfect inverted head and shoulders formation. But for that to have happened, as I had written, we would need to have needed to see a break above 28.93, which never happened, because actually that potential neckline acted as a resistance, and that kept us within this range. So it's all about 28.93 or 28.63. A break of either of these levels will actually indicate where the index is going next. It's more than obvious that there is a lot of, there is a very hard defending of this general area between 28.63 and 28.70 from the bulls. But the more that they fail to actually push the index higher, the higher the chances that this level is going to be lost. And if it is, I bet there are a lot of stop losses below there, and we might see this move accelerating quite abruptly and seeing quite a lot more downside. So if we actually do lose this zone, I wouldn't be surprised at all if we saw a move towards 27.90 happening, much faster than market participants actually expect. Now, the other interesting thing is, how viciously the key level of 11,800 was defended yesterday in the DAX. So yesterday we were seeing like very, very bearish price action in the DAX. We tested like to the pip the 11,800 zone, which we've talked about it over and over and over again. I mean, how critical it is. And by the end of the day, we actually had a complete retracement of the move. We almost closed unchanged after market, of course, but it doesn't matter. We almost closed unchanged. But as we see, that hasn't stopped the market from pushing lower once again today. Again, as with the SPX, it seems that the bulls are defending for now these levels, but on the other hand, they don't seem to have the strength to actually convince that there is a lot few left to push higher. So I wouldn't want to guess, but I think that these markets are in trouble, and if we actually do get this breaking to the downside, I think they're going to be in very deep trouble, and we might see big moves happening in a very short period of time. Nasdaq more or less the same. I think that Nasdaq has already done the technical damage here. So I think that especially if the other two indices break from the equivalent levels we've been talking about, I think that the Nasdaq is going to is going to break down as well completely. I mean, it's going to accelerate lower. So,
any targets, Steve? Any targets on NASDAQ to the downside? And then wrap it with the Russell, which is sitting right on the, I think, 200-day that it's going to take out. But I wondered, look at that.
Third
not much of a bounce.
Yeah, third consecutive day that, it's not by accident, Dale. I was saying it yesterday as well. Well, listen, do you believe in risk on? Start buying the vast majority of the indices today. Why? Because the vast majority of them are sitting on very, very critical support areas. So at least you have a very, very specific
stop.
Risk in mind, right? So you believe that we're going to see a reversal. We're going to see a move higher, and we're going to see the end of this few day downtrend, downturn that we've had in the majority of the indices. This is the place to do it because so many indices are sitting on very, very critical supports. And as you said, the Russell is one more example, testing the confluence of the 200 EMA and horizontal resistance area. It has already acted twice as resistance here. As you see, it was enough to reject price action twice. It rejected it the third time, but this time it was just for a couple of days. We then retested that once as support and it held. So, this zone has proved its importance, right? So it's make it or break it. It either rebounds from here or there is a lot more downside coming for the IWM as well. So,
do you have any downside targets in NASDAQ? Because, they were the most inflated. Amazon hasn't made a new high for about a month and a half now. The only strength that I could see in NASDAQ right now is still Apple. And if that caves, I was wondering where you thought we could go in NASDAQ. Apple might have one more high in it. I don't know.
And here is Apple, by the way. Last time I was looking at Apple, I was looking at this as a bull flag. And it did break to a new high. But as you see, it immediately pulled back. So is Apple still strong? Yes, it's absolutely strong. But look at this amazing RSI divergence, right?
Yeah.
I mean, the previous high was like at
90,
85, and despite pushing to a new high, we didn't even register an RSI above 70, right? So this is a very, very big divergence. So
for my own personal selfish reasons and my positions in my account, I was wondering if you had a downside objective, a few in NASDAQ that I should keep an eye on.
Yeah, absolutely. And we're going to go back to the NASDAQ. But, speaking of which, let's have a look at a few of the stocks that you mentioned. Amazon.
I think it's going to 1,600.
Listen, so far, but we need to see what this leg is going to do. So far, the price action in Amazon does not indicate any panic. You know what I mean? So far, it's very orderly. It's a very orderly correction so far. But if I see an acceleration to this leg, then we're going to be speaking about something else. Now, Netflix, let's have a look at it. Netflix, I think, has more to the downside, right? I mean, this looks to me, we can now delete all that because they've already happened. So I was expecting after we broke down below there and move lower in Netflix. But this looks like a pennant to me. So I think that Netflix should have at least one more leg lower.
That was an island top. You know how many people are trapped at 400 up there? That's interesting.
Oh, yeah. No question about it.
Here's where people are really trapped.
Yeah, Facebook. That look at that parabolic ascending wedge, which actually broke through the other ascending wedge, and then we had like that huge gap, which we didn't even come close in covering. So Facebook, from a technical perspective, is broken, right? I mean, it's completely broken, and even the RSI, doesn't look healthy at all. So we've already started seeing a lot of the stocks that were like the steam engines of Nasdaq, which Nasdaq was the steam engine of the stocks in general, to start to suffer. Right now, having to do with downside targets, if you're looking at this CFD that I'm looking here, the NAS 100, I think that 7,200 is undoubtedly a level of interest, and below that it's 6,980. Below that, it's 6,850. And below that, I think it's the beginning of the wedge, actually, at 6,284. So there is potentially quite a lot of downside. I mean, the next target is 2% lower. The target after that is almost 5% lower from where we are. The other one is like 6.7% lower. And the beginning of the wedge is another 14% lower from where we currently are.
Thank you, Steve.
My pleasure.
Let's see, we have any questions? Stell left. We're getting a question from Dave Malum. Pound Aussie, buddy. Any thoughts? Does it look bullish above 185?
Listen, none of them has broken down. Actually, Pound Aussie looks quite bullish.
I see you, Kirk. Go ahead.
Yeah. I wrote it yesterday as well. I mean, just look at it. We just had one down day, but we found immediate support in the previous resistance level, right? So there is nothing bearish with this chart so far. Nothing. We held this 184.35. So far, nothing bearish with Pound Aussie. Since we mentioned it, let's have a look at Pound Kiwi. Nothing bearish with it. The next upside target is the 161.8% extension at 206. And let's have a look at the Euro crosses as well, the Euro Aussie and the Euro Kiwi. Euro Aussie, so far this looks like a consolidation. We're finding support at previous resistance. So we might actually rebound from this exact level that we're testing today. So I still think that, looking higher until we get some kind of a technical damage is the way to go. This looks more like a consolidation than anything else. And Euro Kiwi came down, retested in a very, very clear corrective fashion, ABC, this previous breakout area, resistance at 174.50, and it's now pushing higher. We had 2 days of weakness. That's obviously not enough to turn me bearish. The next upside target is at 180.60. So I think this covers those crosses as well. Do be careful, though, having to do with the Euro Kiwi. There is some clear RSI divergence. We had a very high RSI reading above 75. It was closer to 80. And this new high had an RSI slightly below 70. So structurally speaking, and from a price action perspective, there is nothing bearish yet. But I do pay attention to this RSI divergence. Perhaps this will end up being a three-drive formation. Perhaps we're going to get, let's say, one more high with RSI, let's say, diverging even more, in which case it will look like an interesting opportunity for at least like a short-term decent sell-off. So I don't think those are the areas that somebody should be looking to buy, although I do think there is more upside. But I think that the moves are quite mature already. So, the reward to risk ratio is absent, in essence, for you to try to join the trend so late. Is your guest here, Dave?
Yes, Steve.
Okay, perfect. Enjoy the interview, and I'll see you all tomorrow.
All right. Thank you, Steve. Hi, Kirk. I see you. I'm going to pass you the controls. Interested to hear you were spot on your energy calls. The last.
Can you hear me?
Yeah. Hi, Kirk. How are you, my trading brother?
All right.
Back.
Likewise. I have a little bit of an echo here, so I'm not sure.
You're coming through clear to me. No echo for me.
Fantastic. So how's the day?
The day's great. I want to acknowledge that you've been structurally very bullish crude oil. You made some great calls on Chesapeake and other oil issues, and here we are. We recently made new highs for the move up around 76, and interested in what your thoughts are in energy or anything else on your radar, Kirk. And we have things like sanctions going back into effect in Iran, and things still seem to be devolving there. They're shooting missiles, ballistic missiles, within a few miles of our troops in Syria, in Iraq. So, do you still believe there's going to be some conflagration before the election, or has that been pushed off? And could that be why Susan Rice resigned?
Well, I have a thesis about that, and I'll give it to you in 1 minute. Can you see my screen where it says managing your hedges?
Not yet. No, I can't see it. So you have to.
How do I?
There's a share screen drop menu. There we go. Have it.
Now you can see it?
Yep.
Excellent. So I just thought it'd be interesting because I was listening to the show here, to the presentation, and I, in September, told my folks, and I started to get them ready in August, to get ready for an October correction. And I had my reasons. A lot of my reasons had to do with a lull in buybacks, and then just a number of things coming together. But I thought it was interesting that you just mentioned a little company that I'm interested in buying, and your price target is very similar to my price target. You just mentioned Amazon at 1,600.
Yeah.
That's what we're shooting at too.
Oh, interesting. Yeah. Great minds, kindred spirits. So, yeah, I saw that up there too. Failure to make a new high. And, a break to 1,600, you're right. It wouldn't damage the long-term uptrend.
Nope.
So, I'm using that kind of as a key for when this correction will, since it's a leader, I don't have to know what price the Nasdaq's going to bottom at. 100. All I have to do is pay attention to Amazon, and we'll see where the market's at should that objective be achieved. So interesting.
Right. So oil. So there's some things going on in oil, right?
Yeah, a lot of things.
Right, and we've talked about a lot of them. At the end of the presentation, you just give me the 1 minute or 2 minute warning. I actually have another stock for you. Okay. And I think that you guys will like it because I think it's a good option play. So, you mentioned what's going on in the Middle East. And the last time we talked, I brought up, hey, this didn't get a lot of press, but there was probably an assassination attempt on Prince Mohammed bin Salman back in like April, May. And since then, the rhetoric has continued to ratchet up. And I'm going to throw out there something for you to chew on. President Trump really has been transparent about what he wanted to achieve the last couple of years. Now, as he said things and he wobbled around and insulted people, folks weren't really sure what to make of him. And I think that by this point, whether you like him or don't like him, you have to take his goals at face value. And because he's really gone in all the directions that he said he would go, for right, for wrong, for good or for bad.
Right. Trade, everything.
So, he's leaned on OPEC in the last couple of months to produce more oil, right? But at the same time, he's sanctioning Iran. Well, to think that he doesn't understand, as Vladimir Putin alluded to think that President Trump and the administration don't understand that they are getting over 1 million barrels a day off the market for Iran. They're at about 1 million now. They came off, and a few 100,000 more are going to dribble off. And that was going to raise the price of oil is kind of silly. So, now we have Saudi Arabia, which announced today Prince Mohammed bin Salman, we've replaced all of Iran's lost oil, right? So we knew that Saudi Arabia could pump this oil. We didn't worry about Iran. So why are we putting the sanctions on Iran? Because we know that Saudi Arabia will pump oil. We know that our production was going up. It's going to be flat now for a few quarters because of the pipeline issues. But this idea that Trump didn't know or the administration didn't know is kind of silly. So if that's the case, then we should ask, how serious are they about putting even more pressure on Iran? And I think the answer is pretty serious. So in the next month or two, right, last year about this time, you asked me when I thought that we'd hit a head, and I said it would be sometime this year, middle to late. Well, now we're moving into the later part of the year. I think it's very possible that you start to see even more Israeli sorties hitting Iranian targets. We already know that it's going on in Syria. I think you're going to see that move throughout the Middle East. May not be Israeli jets, may be American, to the extent that Saudi Arabia has forces for Yemen. You're going to continue to see conflict increase. At some point, there's going to be a major strike against the Iranian Republican Guard Corps. And at that point, the United States is going to make a point to the Iranian generals. Hey, we don't like the Ayatollah. You should probably pick a side. And the sides that the IRGC is going to be able to pick are either the Iranian people or to protect the mullahs and the Ayatollah when that conflict between the Iranian people and the Ayatollahs and the Ayatollah and the mullahs take place.
Where's the highest concentration of that force, the Revolutionary Guard forces? Where's the highest? Is it in Syria?
Syria, yeah, for sure, Syria, but also in Iraq, and
Okay.
you have their mercenaries in Yemen,
Right.
but also the Straits of Hormuz, right? And you got in the Straits there. You have those little speedboats all over the place, and we haven't wiped them out yet. It would take all of an afternoon to just wipe out the Iranian Navy. So, this idea that our ships are afraid of speedboats, no. I mean, I just went to 2 Navy museums, and I saw what we were using in World War II, and that's enough firepower to wipe those guys out. Imagine what we have now. And you don't have to imagine, go online, you can see it. It'd be very simple for us to go in there and just wipe out their Navy and say, okay, guys, think about, do you want to be more like the Egyptian army, a protector of the people, or do you want to be more like some other, like the Chinese army, and be an oppressor of the people?
Which way do you think they're going to go, buddy?
I think that it's incredibly highly likely that they choose to be like the Egyptians. If they choose the other direction, then you might actually get into an all-out war in Iran. But I really think that the direction that we're headed is to support and manipulate and provide some support through special forces and diplomacy. I think it's just going to be a revolution, right? Okay. I don't think you're going to see foreign powers go into Iran, but I think you're going to see the people who have really been pushing back on the Ayatollah and the mullahs, and now with some economic pressure on them, they'll push harder, and the IRGC is going to have to pick a side.
So without the potential for the Straits being blocked, if it goes the peaceful regime change way, what's going to be the catalyst for oil over $100?
Well, I mean, I don't think it'll be entirely peaceful, right? I mean, as soon as you start firing in the Straits and the Iranians drop all their mines, you're still going to have a 2 or 3 week period where probably not a lot of oil moves through there. And the shock value, right? The shock value will drive the price of oil up. But really, that's on top of the supply and demand equation in oil, which has really gotten very, very tight. So if we're under the impression that Iranian oil doesn't come back onto the market for a year or two, or 3, right? Because I think that things happening this fall makes sense. But there's another scenario where this gets put off until Trump is running for re-election. So, it's hard to narrow down the time frame, but the supply-demand equation for oil is tight for the next few years. Until there's a recession, you're really going to have a tight oil supply to the demand because the investment in offshore drilling has been so low. Now, that will eventually change as well because countries like Guyana and Brazil and Angola and countries that have to have oil income or at least cheap oil are going to really start, doing a lot of drilling for just a few years in the 2020s. And at that point, whether it's 2025 or 2030, when all the things come together for EVs and the last big oil investment, then you'll have oil fall off a cliff at some point in the next 7 to 15 years. But
well,
don't you think
that just $100 oil or higher brings about exactly what you said? Brings about a global recession. I mean, especially countries like India. I mean, that's why their currency is under pressure. They import all of their oil, so so does Japan.
Right.
Don't you think that it's plus consumers that are so happy right now may not be as happy with $5 gas again or higher? Isn't that what could be the catalyst to precipitate higher rates, higher energy prices?
Right.
Recession.
I think that we'll sniff $100 oil, but I don't think it'll be sustained. Okay. And the reason for that is the Saudi Arabians are, and I wrote, and this is why I have this article up and this article up. I talked about this all before. The shift in oil production is away from other countries and towards Saudi Arabia, with the United States having experienced most of our growth, right? Our oil production has about doubled in the last decade. It's not going to double again, right? Harold Hamm is out of his mind if he, right, the guy who took his hedges off at $80, 4 or 5 years ago. Great wildcatter, but he doesn't understand the long-term supply dynamics. He doesn't understand that Saudi Arabia has been manipulating this the whole time. Saudi Arabia is going to be for the swing producer here, right? Saudi Arabia will provide just enough oil to make sure that the price of oil doesn't spike too much. So we're at that, what I called several months ago. I called it, right? I talked about this golden age for stocks, and it's not on this chart, but I called it the Goldilocks price of oil. The Goldilocks price of oil is basically where we are now, right? It's not high enough to stunt economic growth, but it is high enough for all the producers to make money. So as an investor, you want to be in certain oil stocks. You want to be in companies that are lean, that have high margin assets, don't have a lot of legacy debt, don't have assets that are probably going to die on the vine. So, I stay away from the majors. Total's the only one that I really play with. But you want some of these really high-end shale plays. And if you could, you'd want to invest in Saudi Arabia. But, of course, their IPO has gotten pushed off again.
Okay. All right. So kind of have your feel for what's going on in oil and your downside targets. You were looking for a correction in the market in October. You have any view on midterms and how that may affect some of the markets that you're involved in?
Well, I actually think that there's a very good chance that if the Democrats get the Senate, I think it's a foregone conclusion that they get the House. If they don't get the House, I'd be shocked. I think they'll get the House by 20 or 30 seats. But the Senate, that's up in the air, could stay the same. They could lose a seat. They could gain 2 or 3. Who knows? But if the Democrats do end up getting 51 seats in the Senate and the House by 20 or 30, you could see something monumental. President Trump has already said, why can't we just put everybody on Medicare? And the gentleman who runs Newsmax, which is a good buddy of Trump, has said we should just put everybody on Medicare. And I agree with that. Now, I don't believe in the free, this idea that everybody's going to have free health care is garbage. It's not going to be that way. It'll be a hybrid system like Medicare operates now if they do it. I think that you could see Trump move in that direction. And if he does, that'll trigger the bear market in healthcare that I see coming. I don't know when the bear market in healthcare starts, but
because they've been high flyers, haven't they, Kirk?
Yeah,
you're going to have quite a laundry list of healthcare companies to look to be short.
Yeah, and United Healthcare will be the first one. So okay. I mean, if you take a look at, I've written articles on United Healthcare, and boy, have I gotten mocked. But because the darn thing just keeps going up, right? I mean, I told people to start thinking about shorting it in here,
right?
And it just kept going up. Take a look at this chart since Obamacare started. Obamacare here. Look at that chart. Yeah. And it's because, and then I'll put that into context, right?
Yeah, parabolic.
Does this make any sense?
No, it looks like Amazon did.
That's right. And United Healthcare doesn't have that kind of sustainability. At some point, this is going to fall off a cliff. The catalyst will be when we get serious about controlling healthcare costs. The reason why Medicare for All makes sense, people go, oh man, it's the government. It's not the government. Does anybody even know how Medicare works anymore? There's different regions in the country, and they're 4 bid contracts.
I'm on it, and I don't know.
Yeah, Medicare is run by Blue Cross Blue Shield in Wisconsin. Okay. So, the reality is that it's not really run by the government. There's government oversight and rules, but once the whole country's on Medicare, now you get the employers out of that game, and they save a ton of money, and the employers are happy. You can negotiate for drugs, and now you can negotiate for healthcare. Everything's on one system called the DRGs. So diagnostic related groups, which I think they may have changed the name of actually, but there's a whole system for controlling the costs. And Medicare has been very, very good for that. You talk to somebody on Medicare and ask them, would you like to give up your Medicare and go on private insurance? Nobody says yes. But at the same time, most people with an income buy their own supplement. And if you go to Costa Rica or Switzerland or a number of other countries, it's basically the core coverage for healthcare that you don't make a profit on, and you really shouldn't because it's monopoly priced. Just like utilities, right? You don't have a substitute for healthcare, therefore you have to regulate pricing. But you give people a supplement and you say, okay, you have to go buy your own supplement. Now you can customize it and the companies can make money. Plus they have the 4 bid contracts. Will you end up with 5 to 10 insurance companies across the country? Sure. But you see what having 100 has done, nothing. So I think that the big surprise that I would throw out there is that President Trump might cooperate with the Democrats to fix healthcare if the Democrats win in November.
That's interesting. Kirk, you're an equity guy, and we're starting to enter this period where tax selling begins to take hold. People start planning, what worked, what didn't work. And I also know that have a good eye for value and undervaluation. And so you watch everything, your even commodities with your views on oil. I was wondering if you had a view on things that are cheap, and what is cheap. I think they'll get cheaper. Are mining stocks. Do you have any view on? I don't think gold has bottomed yet. I don't think silver has bottomed yet. Gold could go to 1,100. Who knows? But do you have any view? And are they cheap on a historical basis compared to the price of gold?
So interesting. Yeah, I do. Interestingly, a couple of weeks before.
Coeur d'Alene.
Yeah.
Okay.
So I like core mining because they're mainly silver, right?
Right.
And our bottom fishing price on that one was $7 a share. It's actually in the fives. I think it's a great buy right now. I think that Barrick Gold, who did they just merge with? Newmont? Yeah. Barrick was one that I've liked for a long time, and I was looking for opportunities to get in. We bought, our speculative folks, our people a little bit more aggressive. We're buying Barrick a couple of weeks before that merger. Nice. So, I think that gold, the price that I keep telling people on gold to watch for is about 1050, 1060. I saw that you guys mentioned 1120. I think you're splitting hairs in there. You guys are traders, so that granularity is much more important to you. For me, I tie the precious metals into the whole crypto thing, right? So the cryptocurrencies have contributed to gold and silver, not really being the fear place.
Because they're getting the money flow going towards crypto instead of dropping a gold bar on your foot.
Absolutely. I told people, and Cody Willard has been on this too. We've been talking about it for a year that crypto was going to crash. And, I tell a story about a kid who I used to coach for baseball. He's 24-ish or 25-ish. And he says, hey, what do you think of cryptocurrencies? And I said, I think most of them will go to zero. I said, you'll have a few survivors. Keep an eye on who ends up, incorporated into the banking system.
How much longer for that process? Because you think about another 3-4 years, and your metaphor is kind of like the .com bubble, where out of the bubble there were a few champions that rose from the ashes. And any idea price-wise where you think Bitcoin could go? I think that's going to be one of the last man standing. I think some of the majors, Bitcoin, Ethereum, Litecoin.
Right. Yeah, Bitcoin will get into the hundreds.
Wow. Okay.
Yeah, Bitcoin will get into the hundreds,
some time,
but they'll survive.
Okay.
Ether, I think same sort of scenario. The winners in cryptocurrency, of which it'll be 3, 4, 5, 6 maybe, are going to lose 90%.
Okay.
Everybody else is going to go to zero. That's how bad.
That's a big call.
Yeah.
That's a big call.
Yeah, and gold and silver will make a comeback probably right after or starting during the next recession, because ultimately, as I've talked about, we're going to get helicopter money. I don't know when the helicopter money hits, sometime in the 2020s. But as Gunluck and Drunken Miller and everybody else are pointing out, right? I mean, this isn't hard to point out this problem. There's too much damn debt on the planet. And at some point, you have to decide, do you make the middle class pay for this debt? Or do you go to the bondholders and you just say, hey, we're devaluing you by 50%? And that's what's going to happen.
You bring up debt. I've read some interesting stories that the black swan, a lot of people are looking at sovereigns, treasuries, and global sovereigns. But the biggest bubble in the debt market has been corporate debt. And they've used that money not for improving the company, but for financial engineering. So they've basically leveraged up what they borrowed through buybacks and dividends. So they end up owning whatever, they borrowed money for. They own something. If it starts to deteriorate in price and rates are going up to roll over that debt, kind of sounds like a nasty recipe.
You don't say. Like maybe the buyback bubble will end badly.
Yeah, because a lot of the corporate borrowing is for buyback programs.
Right. So I have been on this since March, and actually with subscribers a little earlier.
Look at that.
Yeah. So I talked about this in a more
I could
recent
bring
article.
up anything, and you have an article for it.
Well,
you're prolific. You're a prolific writer, Kurt.
I just do this for fun. I'm just the biggest nerd in the world. The only thing that keeps me from going 100% nerd is the fact that I like baseball. So if it wasn't for baseball, I'd be 100% nerd. And here, I'm going to show you a more recent article.
And I have a question from our community. Do you have any opinion about Jamal Khashoggi's assassination in Saudi Arabia's embassy in Turkey?
That's the journalist, correct?
Yeah. Is that you, Kirk?
Yeah, there you go. Here's me geeking out. See, pretty big nerd, right?
Where are you?
That was in DC.
Okay.
I did a big. I just traveled the country 3,700 miles. If you're a baseball fan, I tell you what. I don't know what happened there, but if you're a baseball fan, go to St. Louis. And I hate to say that as a Milwaukee guy. St. Louis keeps beating us. This year we beat them, but Busch Stadium. My God, one of the I don't know why it goes upside down.
Better than Wrigley Field?
Oh my God, yeah.
Okay.
I mean, Wrigley's an experience, right? I've been there a bunch of times. Wrigley,
right.
You go for the neighborhood experience. But Busch here, I've been to 19 baseball stadiums, and I hate to say that this is one of the 2 or 3 best, but it is. There's no doubt about it. So in any case, I drove 3,700 miles this fall around the Midwest and the East Coast to kind of see the lay of the land. I went back to Beaver County, Pennsylvania, because I broke down there in 2009 to check it out. And nothing had been done, and the whole city still is sleepy. And, the old Mr. Belvedere area, the TV show with Bob Uecker.
Right.
And I went there. There's 3 brand new buildings in the last decade since I was first there. You know what they are? A housing project, a assisted living facility for, for people who are on Title 19, and a social services office. There is no new industry, no new business, nothing.
Huh.
And so I've actually
sounds
contacted.
like a nice place to live.
It's actually
if you're tired of the masses, like
it's actually
become in San Diego.
It's actually, I have a ton of pictures on my website, but it's actually a beautiful place. But you look back into yesterday, and the reason I do these drives is kind of see America from the ground up. I'll tell you what, I understand.
You're a gumshoe, man.
It's Philip Fisher, right?
Yeah.
Get the scuttlebutt.
Right.
And so that's what I try to do. I'll just tell people out there, I dive into the macro, which takes me into the politics. I understand why people in Pennsylvania voted for President Trump. That state got left behind by the economic
new economy.
Yeah, for sure. Yeah. And so I actually contacted Jeff Bezos by Twitter, and I laid out a case for they should put Amazon 2 headquarters outside of Pittsburgh, because it would do the most good. It would really be good for that corridor from Cleveland to Pittsburgh. He'd still have access to the East Coast. I don't know why anybody wants to build on the East Coast. The weather events are going to get more serious. It's too densely populated as it is. 1 million people ought to move out of New York tomorrow and just fill out the middle of the country. There's just so many things that we're doing wrong that it wouldn't take much to fix, but for whatever reason, there's no political will. We're hoarding people into the cities. I mean, I hope that that's not some duplicitous plan, but you take a look at this stuff, and from the corporations behaving badly to oil prices going up to too much debt. Ultimately, there's going to be another crisis. I don't know when. I'm guessing the 2020s. And we're going to have to make a decision. Do we go back and for the 4th freaking time try tax cuts for the rich, trickle down economics, and popping up the banks? Or are we going to build from the bottom up? Because this top down stuff, I'm telling you, we're about to fail for the 3rd time since Ronald Reagan, and it's not going to be pretty. And for your traders, and this is a point that I'm getting to, I'll tell you what, I'm already doing pretty well again. I had that bad year in 2015, house burnt down, injuries, perfect storm of bad investments. And I'm kind of kicking ass again. And I'll tell you what, The day is going to come, and I don't know when it is exactly. I can tell you what's going to happen. I can't tell you when it's going to happen, right? Famous Warren Buffett quote. When this economy turns over, if you're short, you're going to become very, very, very rich because it's not going to drop 30 or 40%, right? This little correction we're having now, it's something to buy because there's $400 billion, right? There's $400 billion. If I can find you the article, I'll show it to you, that are about to come back into the market.
Because of the tax law and repatriation?
Yeah. So
okay.
I don't know exactly where I have it somewhere, but there you go. Fourth quarter outlook. This one's actually.
So this is how we get this pullback and another blow off into the end of next year or something like that. Right. Like S&P 4000, something like that.
Right. If you want a really good article, read this one. My fourth quarter macro and market outlook. We maybe should have spent more time on this, but I cover the whole buyback thing. We're going to get a huge rally at the end of the year and maybe going into next year because there's $400 billion of authorized buybacks that haven't been used yet.
Okay.
It's all coming in.
What a great point. And you wanted me to remind you when we were near the end about a stock recommendation you were going to make.
All right. So we're going to talk about Encana for 1 minute.
I've been following it.
Yeah, why we're going to talk about Encana? Because Shell loves them. Shell is if I can find it, highlighted. Here you go. Shell is going to put all their money into the Permian and Canada's Duvernay Basin. Who is huge in those two spots? Encana. Also, Shell is in the Montney and Encana is in the Montney. Shell wants to expand in North America because they know that the offshore stuff is going to be sketchy, especially with some of these countries having to drill out of necessity. And they want to be here. Encana is the perfect asset for them. It is so cleaned up financially and so focused on the assets that Shell wants. I think Shell's going to buy them. Now, I could be wrong about that. However,
the chart pattern is interesting to me if you just draw a straight line off the highs of, 1375 or so, and then go back to 3. Right. It's an ascending triangle, right, which a breakout over those highs would measure $23 or so, buddy.
Yeah, low 20s is what we're looking at. I think it's going to get bought out for around 20. I was buying in here, I was buying in here, and I'm buying again here. And I'll tell you what, I told you this about Chesapeake. Chesapeake has doubled since we talked about it.
Yeah, great call.
Still have a lot of that position and leaps because I think that this winter is going to be I've got a weather forecaster who's a subscriber who's telling me this is going to be a cold winter out east. So that means the price of natural gas is going to go up. We have the pressures on oil. The highly leveraged company like Chesapeake, which was beat to hell, is probably going to go up to $6, $7, $8 a share. I think that one's going to keep going up. But this one's a low risk company. These guys aren't in debt. I mean, these guys are churning out free cash flow. They had a dividend. They're doing a buyback. They're very focused. You take a look at this company fundamentally, and it's probably going to run to 20 by itself. I think Shell's going to buy them for around 20. If oil spikes up, here's where your asymmetry comes in. If I'm wrong and oil doesn't stay between 70 and 100 long term, and it goes above 100, or it gets to 100, 110, 120, and it settles in that range instead of that 70, 80, 90 range, the upside for a lot of these companies is huge, and nobody really bigger than these guys. Their Permian assets, they have takeaway. And that's important, right? There's takeaway for some companies, no takeaway for other companies. That's why companies that can't get their oil out of the Permian aren't experiencing a big boom. So these guys, I tell you what, if you want to buy leaps like January 2020, if that's if that's too long a date for some of you folks, I get it. But I like the leaps, the 2020 leaps. Huge. I think you can make 300%, 400%, 500% in a year. Okay. I don't think there's a lot of people who would argue not wanting to make that money.
All right. Well, what another great presentation, Kirk. And, we covered a lot of ground. I want to thank you again for coming here and opening my eyes to a few things I wasn't paying attention to. And thank you very much, my trading warrior brother. Have a great fall investing trading season, and let's get back together in the winter and see how things are progressing. And I appreciate your insights that you provide to me and to the face of the community. Thank you, Kirk.
Yeah, thank you very much. And hey, to all your baseball neutral folks,
yeah,
if you're not a Dodger fan, throw a little love out there for the Brewers.
All right, buddy. And Shots Brewery and Laverne and Shirley and Squiggy and Lenny.
There you go, all of them.
All right, buddy. Thank you so much, Kirk. You could follow Kirk at Kirk Spanos on Twitter, and he does a lot of writings for Seeking Alpha. As you could see during the progress of the interview, he's a great writer, and he doesn't waste people's time with print. He really has something to say when he writes something. So great work, Kirk. Thanks for all the pearls that you dropped here today and for keeping people opening their eyes and having them keep an open mind. So thanks again, buddy.
Yeah, take care.
All right, everyone, that's a wrap. Good hunting the rest of the day, and we'll see everyone tomorrow for investing.com Thursday. Good hunting, and most of all, don't just count your pips, count your blessings. See you warriors tomorrow. And don't forget, if you capitalized on the turnaround Tuesday trade yesterday, which is continuing today with the euro pushing up again, become part of our trading family. Adios.